Hey folks, and welcome to the Pipnotic Symposium for the 23rd of May 2023. Today we're going to talk a little bit about currency strength. This is a strategy that I slowly started to work on a really long time ago. Actually, this probably goes back over 8, close to 10 years. And the strategy is really simple. It's simply waiting to get into trades until the open of a liquid session, which is typically the London session. So I can't really do that here because by the time London's open, I have a lot of distractions going on. But for people living in the US and in Europe, it's a really good strategy. So what I like to do, if I just show you the configuration of the software, the supply and demand, the currency strength software, there's a setting called session line. Enable session line. We'll set this to true. And you have to set these times so that they are correct. Okay, and so for me, the session, the Tokyo session is 2 o'clock, and this corresponds to my broker time, which is now 4 o'clock. So Tokyo opened about 2 hours ago. Okay, and for New York, for the London session, that would be about 10 o'clock, according to my broker time, which is 8 o'clock GMT. And that's it. Okay, so you do that, you set the enable session line, then you hit OK. And so what the software will do now, it'll go in and it will draw a line that shows you where the session opens. Okay, it's right here. Okay, and so what we need to see is when sessions open, essentially this means that we have a high likelihood of an influx of buying and selling, because this is typically when the banks open their books and they begin to trade. But I did a study a really long time ago about the European Open. I wrote a blog post about it, which was quite detailed, but that was on several sites ago, so I don't even have that blog post anymore. But essentially what it was saying was that based on my observations, at about 8:15 to 8:20 London time, this was about the time when the traders were at their desks and started to work. Okay, so they started filling orders from about 8:15 to 8:20 GMT or London time. And this was very interesting because the observation was based on, when you get to work, you don't go directly to your desk and work. Get to work, you normally kind of walk through the office, park your bicycle, your car, whatever. Then you're making your way to the desk. And normally before you start work, you normally grab a coffee or a cup of tea or a glass of water or something. And so all of these short delays resulted in trades being executed shortly after 8 o'clock. So people are not, or typically not based at their desks filling orders at 8 o'clock. So there was a little bit of a buffer there. And so this is Asia. I live in Asia, and so this is kind of the Asian thing, and this is pretty typical for Asia, where there's not a whole lot of activity. But if we go to a smaller time frame, maybe we can see some micro movement. Okay, so let's just wait. Let's load a little bit. We've got to download the historical data for the 5-minute chart. But what we can see typically here is you'll see these short blasts of buying and selling pressure. And this is happening kind of after the open. So this is the open here, and then we have this big push in the Kiwi dollar. Okay, and we have a sell-off in the American dollar. And so ideally, what we do is we keep an eye on these things. Let me go to this chart, and then I find that pair. That was the American dollar versus the Kiwi dollar. And what I'll look for this, and it was a bullish move. Okay, and so what we can do on this one here, we can even enable that session line as well. So you can see that. Let's put that on because we have the same times there. So let's just wait for that to load, and there it is. It's right here. And so now you can see that we had a strong Kiwi dollar, we had a weak American dollar. Okay, and this was kind of happening the whole time. But notice as well that these are almost a mirror image of one another. What does that mean? Well, that's a very important detail. That actually means that the reason that this pair moved is because this pair specifically is being traded. Okay, so it means that the Kiwi dollar is not being bought relative to other currencies. It's being bought mostly relative to the American dollar. Okay, so this is a really important pattern that you have to learn to see, because when you're able to identify the pairs that are showing volatility due to the buying or selling of the currencies in precisely that pair, this is when you will typically see some very big follow through. Let me close some doors quick. All right, I've moved to my son's bedroom. It seems to be a little bit quieter, but even here it's a real circus. And so what you want to see is you want to see patterns like this. This is really beautiful. And so you can see here that we had a huge push in the Kiwi, a sell-off in the American dollar. You could see that. You could see that here. Let's see if we can get a little bit more data. You could see that begin to happen here. So right around here, you could see that the Kiwi was picking up its strength relative to the American dollar. Okay, so prices started to wriggle north, and we accumulated for a little bit of time. We had this session open, so Asia opened around here, Tokyo opened, and then we had this explosive move on the Kiwi dollar. And this is very typical at the beginning of sessions, where you'll see, as I mentioned, these big increases in volatility during the opens of the sessions. Okay, and this is what we can see here. So the the strategy is essentially about watching this side of the chart initially and looking for currencies that are diverging, and again trying to spot the ones that are moving like mirror images to each other. So if we look at the Kiwi, this is a really good example where you can see that it went up, went down, and went like this. And if we look at the American dollar, we have something quite kind of similar, where it goes down. Okay, and so it kind of tells us that if this is like the zero line here, that this pair moved because of this pair precisely being transacted. Let's see if we can find another pair. I should try and program something into here so that it kind of picks them out a little bit. So where do we see pairs that look opposites of each other? So you can see here a little bit, we saw the American dollar and the Singapore dollar. You see how the American dollar picked up relative, and then they kind of moved into each other. And so that was likely due to a lot of trading. There was an order that went in to buy the dollar Singy. Okay, and then as things settle down, then they kind of the market continued to do its thing. It's really, really fascinating. But I think I can probably solve this with rather help identify these patterns so that it makes the lines that are behaving like mathematical mirrors, using some simple techniques. I'll have to see if I can figure that out. That'd be a really cool addition to the GFX, I think. Anyway, but this is what you need to see. You need to try and look for these situations where you have this mirror image. And so you want to wait until price has moved past this line. This is super important because we have illiquid, we have liquid times of this session, because this is before anything's happening on, and you can see that very clearly. I mean, price is just sitting around doing a whole lot of nothing. Okay, so you want to be on the other side of that line. And that also helps keep you out of the whole concept, the fake outs, where price dashes north or dashes south, and then it kind of moves back in. Like here, price goes down, but then it moves back in. So this is the one where price pops out, and then it kind of shows like a commitment. We managed to trade above some historical highs. And so you want to wait until that happens. And so what you can do is you can take the range that has built up prior to this line, and if we do that, we maybe go to range right around here. Okay, and when prices move outside of this range, well, then you get in to a trade at a buy stop here, or a sell stop should price have gone south, in anticipation that because we're at the liquid time of the day, the prices will continue a little bit. Okay, and then you just take maybe 1 times the box. Okay, so you have a 1-to-1 risk reward here. I don't trade this so much anymore because it's not really my thing, but I remember I did several years ago, and it was a very good trade. Also, I think because we've been kind of moving around a bit, like between Asia and Europe, quite a bit over the past 5 years or so, I found this to be consistent across the sessions. And so this is something that I kind of went back to when I was having a difficult time adjusting to either having moved back to Europe or moving back to Asia. So this is just a really interesting a strategy that seemed to work quite well. I think this could be automated as well, which might be maybe a fun little project for one of you guys to take a look at. But that was essentially the screws and the bolts of this strategy. It's very, very simple. The most important thing is that you should be waiting until prices moved beyond this line. Okay, so I'm just going to put these points down. Number 1, time of day. Okay, session open. Very important. Oh, it's not easy writing with the mouse. Okay, number 2, mirrored currencies. Okay. Range box. The range box could also be changed, where you only look back, for example, a couple of hours, where you have, for example, maybe you take like the past couple of hours. You just want to see a sideways movement, which you'll typically see at the Asian Open, and sometimes even the New York Open, where you see these, prices move sideways like this. Okay, and obviously, the smaller this range, the quicker you're going to hit your target. And so this is just a pretty interesting way to try and box it up. But you need to identify a respected range. So you want to see some highs and some lows. It could be this one here as well. But you want to focus on a very clearly definable structure and price, and then capitalize on deviations from that historical perceived value. Okay, so that's super important. And then we have, all right, gosh, noisy here. And then you have the 1-to-1 risk reward, and that's it. I was going to finish this off. It's not going to get any quieter, I don't think. But this is essentially the strategy. Okay, you need the focus on this session open, not doing anything here. Mirrored currencies. You want to look for those currencies that are mirroring each other, like this one, like these two here. This is very clear. You want to focus on the range before the open of the session, so a nice tight box like so. And you want to see deviations from that box when the session opens, after the session opens. And then you want to go for a risk reward of 1-to-1. Super simple. Good. It's getting noisy here. I'm going to finish it up. Have any questions? Let me know. Thanks for watching.